In our last video, we covered Bollinger Bands, and we spoke about how John Bollinger uses other non-correlated indicators to create trading signals. These include the Relative Strength Index, and this will be the topic of today's video. So the Relative Strength Index, or the RSI, is a momentum indicator, and it often indicates overbought or oversold conditions in the market's price. It was created by a guy named J. Wells Wilder Jr. in 1978, and he was a mechanical engineer who died only a couple of years ago. He also came up with some other important indicators, including the average true range and parabolic SAR. The RSI measures the speed and magnitude of an asset's price movements over time, and it allows users to evaluate overbought or oversold conditions. Overbought means an asset is trading above its true value, and traders often see this as a signal for a price correction or a trend reversal, and so they might look at selling the asset. On the other hand, oversold means that an asset is trading below its true value, and traders often see this as a signal to buy the instrument. Like stochastic indicators, it is also scaled from 0 to 100. Readings below 30 indicate that an asset is oversold, and readings above 70 indicate an overbought condition. When an asset looks oversold, it may be an indicator to buy the asset, and when it looks overbought, it may be an indicator to sell the asset. So how does the RSI work? As a momentum indicator, the RSI measures an asset's up periods over a specified period of time, and it measures the asset's down periods over a specified period of time. In addition to overbought and oversold conditions, the RSI also indicates trends, and this occurs when there is a centerline crossover. As you can see here, a movement from below the centerline of 50 to above indicates a rising trend. And a rising centerline crossover occurs when the RSI value crosses above the 50 line on the scale, moving towards the 70 line. And this indicates that the market trend is increasing in strength and is seen as a bullish signal until it approaches the 70 line. And conversely, a movement from above the centerline of 50 to below indicates a falling trend. And a falling centerline crossover occurs when the RSI value crosses below the 50 line on the scale, moving towards the 30 line. So in summary, the RSI is a very important indicator. It helps traders to predict the price behavior of an asset. It helps identify overbought and oversold conditions. It helps traders to confirm trends and possible trend reversals. And it also helps in creating buy and sell signals. Thanks for watching. If you have any questions, please send them through to us. Our website is fxscouts.com. We are very happy to answer any of your trading related questions.